Ladies and gentlemen, boys and girls, thanks for tuning in to another episode of Crypto Hot Seat, brought to you as ever by TokenMetrics.com. Crypto Hot Seat is, of course, the only interview show that matters in crypto, which is why I'm very happy to be joined today by Mr. Dave Weisberger. Dave is the co-founder and CEO of CoinRoutes, an algorithmic trading platform that seeks to make it easier for everyday people to take advantage of high-powered financial technology. Dave, thanks for joining us on the show.
Thank you, Dylan.
Where do we start with algorithmic trading? Obviously, this is something that's been going on in conventional markets for a long time, and it's not even new within crypto. Why is CoinRoutes awesome at algorithmic trading, to ask kind of a basic question?
Well, I think that we took a very interesting approach. We started, it was actually my co-founder, who's also my son, just for a human interest story, is Ian Weisberger. He brought me into the company, not the other way around. He had the idea to help people trade and navigate fragmented crypto markets in early 17. Now, people remember what was happening in 2017. There were often $1,000 or $2,000 price differences between Bitcoin on one exchange like Kraken and maybe Bitcoin trading on Coinbase, or trading the kimchi yard with Korea. But trading across exchanges was a big deal. And so we basically said, okay, I don't know how long this is going to last. So let's look at crypto market structure and say what's different between crypto and equities or FX, because most of the people who moved into crypto trading were professional traders in either crypto, either in equities or in FX. And so we isolated a bunch of differences that matter. So for example, at any instant in time in CoinRoutes, we're looking at the entire order book. Now, what does this mean? In Bitcoin right now, and I don't even have to look because I know this is true, within 1% of where the current bid offer is, or 1% of the trade, on either side, there's going to be somewhere between 5,000 and 10,000 individual orders that constitute the order book. In most, like equities or individual price levels that exchanges represented. In equities, maybe within 1% of the price, you would have 10. In FX, maybe you'll have 5. It's just, there just aren't that many price levels. It's a totally different thing. And this has a couple of effects. First of all, technology needs to be built from scratch for crypto, or it just isn't going to have enough data to make decisions. Second, it means that high frequency trading is different in crypto. In crypto, there's no need to be the first one to a price level. In equities, you've read the book Flash Boys. A lot of people talked about it. He got a lot wrong in that book. But the one thing that is right is that there is a need to be the first one at a price, because that person probably will be able to collect spread. By the time you're the third, fourth, or fifth person at that same price level, the only time you're ever going to get filled is when it goes through your price level and drops if you're buying, or goes through your price level and rises if you're selling. And so, people have used an old quote from a movie called Glengarry Glen Ross, where they're talking about sales leads.
I remember this
movie. And the line is, we're having a sales contest. First prize is a new car. Second prize is steak knives. Third prize is you're fired. In high frequency trading, it's that race that's going on. Crypto doesn't have that, because for a very, very small amount of money, you can bid more. And so as a result, you don't get these concentrations at individual prices. You get a lot more volatility. And so when you're trading, you need to be cognizant of all that. So CoinRoutes, when we built algorithms, is cognizant of all that. We have all the data. We understand what order books look like. We understand game theory and randomization, etc. And so we help our clients achieve a better price. If they're trying to buy 1,000 Bitcoin, it might take 45 minutes to an hour to get it done. But on average, it's going to get done dramatically cheaper than if you just ask someone for a price to sell you 1,000 Bitcoin.
Right. I'm super curious about the dynamic of having your son as your co-founder, and you made it clear that he was the one who roped you into his operation. But I'm curious. Obviously, your son is a crypto guy. You come from a strong experience in conventional markets and finance. How did you begin your crypto story? Was your son involved in getting you into crypto? How did it happen?
Well, the funny part is, so I had left Two Sigma, where I was running their Two Sigma Securities, the high frequency trader and the market maker. And I went to a small software company called Core One Technologies to basically build best execution reporting and analytics. Why did that happen? Well, because I was on my non-compete and I couldn't go to a competitor of Two Sigma in the marketplace. So I went to this small software company. It got bought by Market. And so I was there. They gave me options as a key man. I became global head of equity market structure for Market. Market got bought by IHS. And I found myself working at a multi-billion-dollar software company thinking, is this really what I wanted to do? What I really wanted to do was something entrepreneurial. So I was kind of chafing at it. And eventually we agreed and I left. And I left on very good terms. So here I was in early 2017 trying to think of what's my next opportunity. And Ian, he says to me, and this is exactly what he said. He said, I have this idea for building something in crypto to trade Bitcoin and Ethereum, which point I didn't even know what that meant. I need to talk to someone who is an expert in market structure and trading technology. Do you know anybody? Now, I'm quite certain that he was saying that in a way just to be funny, because people will tell you about me that I hate to toot my own horn. It sounds really arrogant and egotistical, but quite clearly that was my expertise is market structure. And I was global head of market structure for that company and trading technology. That's all I've done basically for 35 years. So it was very interesting. So he asked that to me, and then the more I dug into what was going on, the more interesting and more fascinating it got. To say I was orange pilled just does not go far enough. Right? It's one of those things. I swallowed it. I drank the Kool-Aid. That was early 17.
Yeah.
If anything, I'm more bullish on the concept of Bitcoin as a store of value, on DeFi as a disruptor to traditional finance than I've ever been. But that's how it started. It was his idea, and then we sat together. And one of my favorite story was the very first. He asked me, okay, draw out how this could work. So I drew out a flow diagram of how you build a router, what the components are, what you would need to build. He takes one look at it and he tears it up and says, nope, won't work. And the reason is because he said, you can't ask people to put their wallets and their wallet addresses and their keys in a centralized system in crypto because they're never going to trust you. Oh, interesting enough, people do trust others, but and actually, we filed for a patent on this. Whether we'll get it or not, I don't know. But our methodology is to have a client. Each client has their own unique router. Each of our big institutional clients, individuals won't have that. It'll be shared, but the institutional ones do. And that works with a central market data plant or multiple central market data plants. Now, why is this relevant? We process 15 terabytes of market data a day. So if you're a hedge fund and we handed you CoinRoute's code and said, don't pay us anything, here's the code, knock yourself out, run it, it will cost them about $50,000 a month to run the code. And a lot of them don't pay us $50,000 a month in trading fees. Quite a few don't. So the reality is we get huge economies of scale for our clients by this architecture. Plus, they have complete control over their wallets and keys. They're the only ones who decide their security. And so that was important. So that was a design that we came up with together. Truth is, he came up with that idea, and I just helped fit it in terms of how it would work.
Can you make it clear for me, please, as when we talk about algorithmic trading, is there a difference between algorithmic trading in general and high-frequency trading in particular?
Yes. High-frequency trading is generally, there's multiple types of it. Some people like to call it low-latency trading. What you're really doing with high-frequency trading is trying to buy low, sell high by earning spread on either by market making or by buying when you see momentum moves going up and down. Algorithmic trading answers a different question. The question we answer at CoinRoutes is, I want to buy, like today, APE USD. At this point in time, over this time period, please do it for me. And so with one keystroke, I could say, buy 1,000 APE USD over the next hour. Push one button, and the computer will then start placing orders on your behalf and work that for you. You don't have to do it, knowing that compared to the price it was before you submitted the order, and compared to the average price that will happen during the life of the order, you're probably going to do really, really well. And so we answer the question, given constraints, given ideas, how long you want to take, etc. If I want to buy something or sell something, what's the most efficient, economical way to do it? That's the question we answer.
I hear you on efficiency and economic sense. Kind of, you're setting up a conversation about the government now a little bit, if I do say so. I wonder if you could talk a little bit about this. Well, let me phrase the question this way: why don't we have a Bitcoin spot ETF yet?
We don't have a Bitcoin spot ETF because the former chairman of the SEC was afraid that Bitcoin was not going to be a good asset, and therefore he was afraid of his reputation if Bitcoin turned out to be a Ponzi scheme. I hate to say it, but that's true. Now, the SEC's job is not to pick winners and losers, but that's actually exactly what happened. And since Jay Clayton ended up going into crypto after he left, it's very disingenuous. The current chairman of the SEC, however, his reasoning is he wants political control over Bitcoin. He wants to be able to regulate. And so he's using this as his hammer to, hurt. And he knows he's hurting investors. I mean, he's not a stupid man. I mean, when I say he's hurting investors, we're talking like seriously hurting investors. Like it's been estimated that people who are mostly retail, who own Grayscale Investment Trust, GBTC, who's applied to convert to a spot ETF, are losing north of $6 billion in value because they're not allowed to convert to a spot ETF. We know that futures-based ETFs are going to have enormous tracking error. And that's what investors can use. So if you want to invest in Bitcoin in a 401k, your choices are GBTC or the new futures ETF. That's more or less the only choice you have. Both of those are dramatically inferior to a spot ETF. And his reasons are wrong. I mean, they're just flat wrong. And it's actually embarrassingly wrong. So the only possible reason in reality has to be he wants to be able to regulate it. That's my answer. Now, if you want to know why the answer is embarrassingly wrong, I'll give it this way. They actually made the claim, which is maybe the most asinine claim I have ever seen written by people who work for the SEC. Now, I need to say before I explain how asinine this is, that I actually consider multiple people at the SEC who are still there, who work in places like DERA, the Division of Economic Research and Analysis, as friends. I certainly have lots of respect for them. Mm-hmm. But when they wrote in the denying in the letter that denied the last Bitcoin spot ETF application, that they think that the CME futures are less subject to manipulation than spot Bitcoin, that is completely asinine. And it's actually, if anything, it's reversed. But it's asinine because whatever happens with the spot Bitcoin price is immediately reflected in the CME price or vice versa. The difference is the CME doesn't trade 24/7, and the CME has circuit breakers which stop it from trading. So in large volatile moves, the CME is going to be more manipulatable because you can force it to close by an exaggerated move. And you can't do that with spot trading. So the argument that it's more manipulated is literally wrong, but that's the way he's justifying it.
Why does it feel like Washington hates crypto? And there are some notable standout exceptions, of course. Why is that the exception as opposed to the rule?
So when we were talking before this, you asked me what's controversial view. I'm going to give you some controversy. Yeah, I think that there are elements on the left, notably Elizabeth Warren and her cadre, who most people would say Gary Gensler is one of her acolytes, that understand because they're smart. They understand fully that Bitcoin represents a threat to their agenda. It represents a threat to their agenda in two ways. Way number one, Bitcoin as a store of value, if it succeeds in becoming digital gold, and if it succeeds in becoming a globally recognized store of value, it will become a measuring stick by which monetary printing and continued fiat currency debasement will become harder and harder to do. Those people for power want dependence on the government, and they want to be able to continue to print. Second, directly, Bitcoin, I should do it this way because the other way is a bad gesture in the UK. I used to live there.
You're very considerate, sir.
The second reason is because Bitcoin allows for financial freedom, and so does a lot of crypto. If you consider what's better for a politician who wants people to be dependent on the government, forcing people to have savings accounts that pay negative interest rates or letting them be able to stake crypto and get a positive interest rate. Having people be dependent on the banking system or letting people be able to freely transfer wealth from place to place for very, very economic reasons. The economic freedom embodied in Bitcoin in particular and crypto writ large is significant. And so if your goal is control over the population, not helping the population, but control, then you're going to be resistant to it. On this, it's really important to understand that it shouldn't be bipartisan. I'm focusing on the left because that is where the real issue is. But Ron Wyden, for example, in Oregon, he's clearly as progressive in thought and considered as far left as Elizabeth Warren is. The difference is Ron Wyden is also a proponent of freedom, which is why he supports Bitcoin and has signed on to that. So it's not like it's all of Washington. It's not like it's all of the Democratic Party. It's just the people in the Democratic Party who want control over the citizenry. They're in the ascendancy. That's where the issue is. And that's why people like Ryan Selkis of Messari are pushing so hard politically to actually work within both parties, because it really is important. And economic freedom is a very important issue. And it's one that you should understand. It's not about how progressive or elitist you are. It really is about economic freedom, and it should be bipartisan.
What's something that everybody seems to get wrong within crypto? Do you find yourself commonly clearing up any misconceptions, whether it's somebody in or outside of the industry?
Yeah, I mean, first of all, there's a lot of them. I mean, I think people look at Bitcoin and I'm not the expert on its energy use. I think people like Nick Carter are far better than I have. I've read what he's written. I understand it. But just logically, the fact that Bitcoin can convert energy at any point in the globe, at any time of day, into value, it's going to help stabilizing the power grid, et cetera. It's probably more likely to help and incentivize renewables than hurt it. That is a misconception. The good news there is that executive order that just got signed last week is forcing smart people to study exactly that question. So I think that misconception will get cleaned up. Another one is the notion of pseudonymity versus anonymity and what that means. The reality is Bitcoin, if you talk to someone at the FBI, and I have, so I know this is true, they love it when criminals use Bitcoin because it's more traceable. That said, standard everyday users of Bitcoin more or less can do with it what people do with cash. And there really is no great issue with doing so. And cash is very popular for lots of reasons, most of which I don't need to explain. So the pseudonymity gives you a lot of the benefits without true anonymity, because it means that if you're going to do large-scale criminal enterprises, such as avoiding sanctions, you're probably not going to be able to do it. Those are big misconceptions in the general population. Inside the crypto community, there's a misconception about how you can trade and how much it should cost to trade. And that's what CoinRoutes is focused on, right? It's really not that expensive, or shouldn't be. But different people want to be able to pick up a phone, believe it or not. In the internet age, you want to pick up a phone or send a Telegram chat and say, I want to buy or sell a large block. And that's just never going to be as efficient as trading it using technology.
Yeah, absolutely. Absolutely. Dave, I wonder if you can tease a little bit of the rest of the year for you and CoinRoutes. What are you guys looking forward to for the rest of 2022?
Our big focus right now is expanding our suite of products with vis-a-vis derivatives, adding options, being able to take our spread trading algorithm, which lets people buy one product and sell another simultaneously, make that better, expand that out to basically, we're growing our clients, et cetera. And then the big initiative that we are working on all year, frankly, is we are building, although we won't even start collecting an interest list until the summer. We are going to build a active trader product for people who are serious individual traders who want access to this technology to be able to leverage CoinRoutes. In order to do that, we have to, if you remember what I said earlier in terms of security, right now all of our clients get their own system. We have to build a secure multi-tenant platform that uses the same technology. The same technology, it works, and we can do it this way. It's just a question of working on scalability and the security aspects of this, which is something we are heavily working on right now.
Yeah. Well, we'll be excited to see that all come to fruition. Thank you for sharing a little bit of time and expertise with us today. Our guest, everybody, is Mr. Dave Weisberger. He is the CEO and co-founder of CoinRoutes, an algorithmic trading platform that he runs with his son, Ian. So be sure to check out coinroutes.com and follow all the good news they got working on over there. Dave, thanks again for joining us, and hope to have you back sometime.
Thanks, Dylan.